Good afternoon, everybody. It's Max Convexity. Welcome back to the channel. We're going to do like we do every day about this time of day and take a look at the Defiance funds and maybe even a few of the Yield Max funds, or at least some of the Yield Max stock charts. Let's start with the 5-minute max spreadsheet. So I have a different, every date has its own, I guess, 6 rows. I follow the 6 kind of high yield funds of Defiance. They have more funds than this, but the ones I'm particularly following are the high yield ones. So we can scroll back and see what happened yesterday. You can see yesterday was, a nice day. Day before IWMY lost money. Day before IWMY lost a lot of money. And you can also kind of see how the dividend estimates are changing over time if you watch this every day. In any event, all right. So right now we have 4 of the 6 underlines that are outperforming the parent asset. That's QQY, JEPY, IWMY, and SPY-T. Great job, guys. Great job. QQY is up 30 bips. SPY-T's down 15 bips, but SPY-T's outperforming the S&P. And QQY is outperforming the NASDAQ. Nice job. All right. So on the day, though, IWMY is looking at about a $1.8 million loss. JEPY is looking at a $2 million loss. That would take IWMY to negative $1.3 million for the month. The other 2 funds are doing great so far this month. Dividend estimates in the cent range for all of them except USOY, which is looking like $1.27. Which would be nice, right? All right, so let's look and see what's going on with IWMY. IWMY trades Russell options, of course. All right, so here we have it. There's today's profit box. This is the strike they sold today. This profit box represents the strike they wrote. It's a 2065 put, and they got about 13 or 14 bucks for it. I can tell by the distance between the top line and the bottom line. Let's go back there and see if that was right. See, but it's also on the chart. Yeah, 13.50 premium earned. IWMY. They wrote the 2065, received $13.50. All you have to do is subtract those 2 numbers to get the break even. Or if you don't like numbers, that's why you can watch this report. You can look at the profit box and you can just hope or root for the market to finish somewhere in this area or above. Remember, this is a bullish strategy, so above works also. All right, now let's look at SPX. This is what JEPY trades. This is more of a sideways situation. I mean, it has gone down from the open. Hopefully, this is getting ready to rally into the close. All right, now NASDAQ opened the strongest of any of them, but it came back in and is now at about looks like about a 90% profit. Now, the 5-minute max spreadsheet had it a full profit on QQY, but sometimes it's a few minutes behind on updating. All right, so now let's see what's going on. Let's see which ones are the most. See, GameStop's number 1. It's up 8%, but that chart doesn't even look like anything. But this, I mean, I guess from last night's close, is that 8%? 26.68 to 27.66, $1 on 20. Yeah, it is. I mean, but it just doesn't look like 8%. All right. So Tesla having a big day as well. Now they blew out both their strikes on the open, but then they've settled back in, and now they're, close to max profit on one of them, and they are topped out, maxed out on the other one. This is a great day to be a Tesla shareholder. Look at Tesla. Tesla going right up with Tesla. These things do get some upside occasionally, just not a whole lot. But that's an example today of Tesla catching some upside. But of course, the parent asset was up 3.6%, but Tesla was up 2.9%. That's the kind of information we look at in the buffer report. We just look at it in graphical form. Yeah, there it is. That's what I just said. The left one is the high yield fund. Tesla's up 293 bips. Tesla is up, a little bit more than that, about 3.5%. Okay, so let's go back here to the charts. We'll come back to the buffer report before we leave. Let's see what else is moving today. VIX is moving. That's never a good sign when VIX is moving. That's volatility. VIVIX is moving as well, which is volatility of volatility. Okay, NVIDIA is moving, which is good news, except the high yield fund, NVIDIA, sold the 125 strike. The market's now at 128, but that's not a huge deal. But unless these guys roll out, they are capped out for the week. Now look, TLT's up 1.5%, and this matters to Defiance people because of TRES. Although I haven't really talked to many people that own TRES, it's not widely owned, but it's an interesting fund, and it works the opposite of all the other funds. It wants the usual relationships to fall apart. It's long volatility, so it wants prices at either extreme, either higher or lower. The red area is called the valley of death. As long as prices stay in there, the fund's going to suffer a trading loss. But if the prices of the fund's underlying, which is TLT, can zoom outside of the red box, in theory, the fund will have trading profits. So now let's look at this one. Well, it's on the bottom line there. It's down $7,000 overall, but it's up $2,300 today. So from last night's close, this option position is getting more valuable. This is a four-legged option position. They short 250 puts and 250 calls, both of them at the money at the time they shorted them. But then they go long 500 calls that expire at a later date, 2 weeks later behind it, and 500 puts. It's kind of a neutral position. It is a neutral position. It's long volatility though. It's sensitive to changes in volatility. If volatility goes up, the position's profit loss should improve, and we can demonstrate that. Right now, the implied volatility is 13.6. Let's say we get a 50% bump, and something happens and it goes to 18 overnight, which happens occasionally. So then you're looking at even if the market doesn't go anywhere for TLT, profit no matter where it's at. Generally, when you get a bump in volatility, generally prices are moving as well, but not always. By the same thing, when you own this fund, it's sensitive to volatility. So if the opposite happens, if you're running along and you get and volatility gets crushed for some reason, the fund can actually lose more. And anyway, the valley of death ends at around 96.57. Well, that's if volatility goes down. Let's see. Volatility where it is now, 96.20. So let's look back at the chart. Shoot. Did that really say 96.20? This grows all the time. This grew. I didn't update it yesterday, but as time passes, and the options, there's four legs of this trade. So as time passes and each leg decays, they decay at their own rate, of course, and the valley of death changes over time. You can see the way it changes. Sometimes it gets bigger, sometimes it compresses, sometimes they are able to run the price out of it. I thought we were going to get out of it today, but I didn't realize it had expanded. So these guys monetize bond volatility. There's a bond volatility index called the MOVE index. Now let's take a look at this MOVE index. I'll start it. Hang on. Move to existing. Okay. All right. So according to Jay, and just you can tell by the price, this TRES started at 20, it's at 17 now. We haven't had a lot of bond volatility. It does look like bond volatility is kind of going down and to the left, to the right on this chart. Let's go out a little bit more. Then I'll get on to something else. I know that a lot of you guys aren't interested in TRES, but let's, oh gosh, you got to be kidding me. Okay, so this is interesting. So when you zoom out here, you do see some spikes in bond volatility. And this fund wasn't around then, of course, and it looks like it would have done great during COVID. And I know I shouldn't say I know it would have, but I would imagine it would with the strategy they're using. Strategy they're using not only takes advantage of volatility, it also takes advantage of it also just takes advantage of the price moving. And sometimes one day the market was down 8% or something during COVID. So and bonds were going crazy as well. So that would have been an exciting time. That's the reason you have a fund like that. I don't think they're doing a great job marketing it. I think it should be marketed as a long volatility fund or something, as I don't know. Anyway, but what do I know? I'm just a guy on the internet. Okay, so let's go to the buffer report. Let's see what's getting buffer and what's not getting buffer today. Okay, we'll start with the single stocks. Like I say, Tesla's the standout, and look at TSLP. Wow, that is impressive. Now, TSLP, I've often said, instead of selling weekly calls, they sell monthly calls. Well, monthly calls allow you more upside. You don't get as much buffer on the downside, but on the upside, TSLP should be ahead, and they darn sure are today, and that's the way it's designed to work. Now, they aren't designed to outperform. I think this is still an outlier for a day. But it doesn't surprise me that TSLP is ahead of TSLY. Of course, TSLP is the curve fund. And it also pays less of a dividend because the monthly strategies aren't as efficient at gathering dividends. So the dividend is actually a little less too. All right. Well, anyway, hopefully you got a chance to see where yours was on here. Standouts on the bad side, I guess you would have to say Misty. Okay, I was going to show you something. Okay, but on the bad side, you'd have to say Misty and AIYY. Sky doesn't look great. Looks like AMZ's outperforming on the way down by a little bit, as is Maxi and Ybit. I did want to direct everyone's attention to Crash over here. Crash is the inverse Tesla fund. Okay, so what I did, or what I attempted to do, is I just put a negative in front of Tesla's return. So, wait, let me see if this, but it's not, for some reason, it's not working. Because to make a benchmark, I was trying to, there's no way to benchmark that I could think of to benchmark Crash because it's an inverse fund. So I tried to make it just inverse, but if it was right, it should say negative 3.66. So there's a problem wrong with my formula. So in any event, at least Crash is on here now. And we can see it's not a great day for Crash, and we wouldn't expect it to be a great day for Crash. But I will say this, it's not as bad of a day for Crash as it looks like. They aren't outperforming the underlying on the downside like it looks like right here. They're only down 3.3%, whereas the underline's down 3.6%, or the underline's up 3.6%, but since you're an inverse fund, it's down for them 3.66%. All right, I'll work on the coding on that. Let's look over here at the indexes. What is that? Oh, yeah, I remember that one. All right, over here on the indexes. Standouts today, QDTE, IQQQ, QQQY looks good, outperforming on the upside, and outperforming JEPQ and JEPI and SPY-T and SFOL. Triple QY is outperforming all of them today. Now let's go look and see what the reason for that is. We'll look at Triple QI's individual sheet. Oh, I think I know. I think it has something to do. Look at all this premium they received, almost $100. It's not as much as they got yesterday, 145. Their typical day is more like 60 to 80. 75 is typical, 62, 67, 80. The 150s, 120s, 100s are outliers. 66, 51, 72, 51, 70, 70, 78. You can see kind of how their days go. One event, 99 was a pretty big capture, and they're, it's $1.2 million is what they're going for. Really just about $1.3 million, and they're earning about $1.2 million at this point. Looks nice though. Looks nice. I like to see them outperforming. That's nice. Outperforming all the other funds. This is a good fund, and it does catch upside. We can even see the upside of COT. The upside of COT is represented between is 19,540 and 19. It doesn't look like they cut upside here. It's the intrinsic points though. It's these 6 points. Oh, yeah, there wasn't. They wrote this option barely. Okay, yeah, they didn't catch much upside today. That's right. It's all extrinsic. So, but yesterday they caught hella upside in any event. I appreciate you guys being here. I'll be back at the end of the day and we'll tally all this stuff up. Thank you very much.